Good morning, everybody. How are we all doing? Not happy. Morning, Martin, George, Evil, Andres, Momo, Virginia, Neo, Jules, Champagne, Adrian, JC, Vitali, Gav, Gregors. It's time. Michael, how are we doing? So yeah, he's still waffling on. Oada, idiot. Morning, Jazz. Still going on basically this morning, but I've no idea what they're up to. What they've done this morning is just basically devalue the yen. Don't get it. Just don't get it. 150 ADR. I'm out basically of everything. 11k loss. Nothing I can do. I'm still up overall over the last 2 years on the US dollar yen, but no comfort really at the moment. But basically, the upshot of this morning is looking at US dollar yen and obviously looking at what the yen are doing, what the Bank of Japan are doing, trying to pick it apart. But moving forward, I'm not going to trade the yen probably for the rest of this year until they have figured out what the hell they're up to, because what they've done this morning, announcing the gilt purchases, it just doesn't make sense. It sounds like economic suicide. But anyway, they have said it, so it's weakened the yen. So they're trying to boost inflation by increasing or maintaining gilt bond purchases, which makes it less attractive to buy the yen. I just don't understand how they can be pushing it this far, or why they're pushing it this far. There's something else going on under the hood that we don't know about, because it's not economical for your businesses to trade at this level, yet you're doing something to drive inflation up, which makes everything more expensive, which makes your businesses need to charge more, which drives everything in the complete opposite direction you want it to go in. So I'm confused, which, as you can see, I think the rest of the market is as well. Not what we were expecting this morning. But anyway. Morning, Peter. Well, Japanese are known for harikiri. Correct. Exactly. Just bizarre. So basically, when you do gilt bond purchases, the market can interpret it in two ways. The way that this is being interpreted in this particular instance is that they are looking to drive up inflation. The other way you look at it is they have a positive outlook on their economic future, meaning that it will encourage investment. So there's two ways this can be interpreted. The market is interpreting it as the worst case scenario. Somebody's posted this morning, Discord's gone over here, in Discord, whipping post, wasn't it? I think. Where did I see it? Oh yeah, yeah. So they're holding 150 billion in short-term deposits in foreign banks and around 1.3 trillion in foreign reserves. And this is what they do. This is how they produce these intervention moves, by liquidating those overseas assets. We know they've still got it. We've still got the ability to do it, but how does it benefit them at the moment? Because they've come out this morning and said that they want their currency devalued. You're not going to do an intervention move if you want your currency going the way that your entire population and every business in your country doesn't want it to go. What can you do against that? So for the time being, I'm not going to touch any yen pair at the moment, because this stinks of Swiss franc mentality, which is do what the hell we like, screw the rest of you. And it's impossible to have a bias on something where they can just do what the hell they like when they like. So this move, when you get, if you look at previous large moves on things, trying to When you look at large reversal moves in the market, what they tend to be preceded by is an incredibly strong push in one direction. Yeah, so you get a move up and then you get an accelerated rally, yeah, or an accelerated push, which then pings back like an elastic band theory. That's exactly what we've got if you look at the yen here. So there is a possibility this is an exhaustion move, and by the end of the day, we will see a whacking great shooting star there. I can't take that risk. I'm too overexposed on it. So there is a chance it will be the last push, and they will do something about it. But this morning's news is kind of the opposite to what you would expect after being squeezed to that extent. And, you know, it's not being squeezed to that extent, is it? It's being squeezed to that extent. After being squeezed to that extent. Yeah, they're just dead in the water. I don't know. But anyway, the only thing that I can think of as to why they would do what they're doing is because of the US situation with CPI pumping. That is going to lead to longer term interest rates in the US, and as the Fed have come out and said, the potential for a hike. We don't know what CPI is going to do for the next 6 months. If it doesn't come back down again, they haven't got any alternative but to hike inflation. Putting more of your assets overseas into the US dollar is going to earn you more money. But when does this stop? Yeah, I mean, don't know. So obviously the interest rate decision is 0.1, which is when you look at the differential, obviously the difference between the US dollar at 5.5 and them at 0.1 is 5.4. Can't type this morning. So you would never ever put your money anywhere else but there, because that's where you earn it. You don't earn it there. So the move is logical on what they're doing, what the institutions are doing, because obviously they haven't done anything with this that means, hooray, we should be putting more money into the yen. And they've announced that they're going to carry on with their bond purchases, which is just deflating their currency further. So for the minute, steering clear. Going to focus on everything else and just stay out the ends, because this thing has got the potential to carry on going forever, if you like, at the moment, for the foreseeable future. But it's also very, very strongly got the possibility of them pressing the nuke button, as they have in the past. Again, as in everything in trading, it's a 50-50 shot, isn't it? I'm not going to get into a position trade. Stop loss trading, fine. But a position trade on something that has a 50-50 chance of never stopping or catastrophically moving in the opposite direction, 10 ADR against you, is just not an instrument you can position trade. So it's just sticking out of it for the moment. I might take some stop loss based trades on breakouts, because when this thing goes, it goes. Yeah. And you can make some very good money because the moves are very fast and very sustained a lot of the time, as we know. So it's worth trying to take that. This when you look at this chart here, it looks like the S&P 500, doesn't it? It's just non-stop trend. But when you look at the economics, not possible for them to sustain it. So what happens next? If you haven't got any clue as to what happens next, don't trade it. I'm always of the, you've probably heard me say about crypto before. The reason I don't trade crypto, I haven't got a bloody clue how it works. If I don't know how it works, I can't trade it. This is now become crypto to me. What they're doing is not logical. It isn't what they were expected to do. And if I don't know what they're going to do next, I can't take a risk on position trading it. But like I say, if you stick a short on now with a stop loss at 2 ADR, which doesn't look like much, but it'd be somewhere up there. Yeah. If they intervene, you get a 5-1 out of it. If you risk 5% of your account on that, happy days. That's the sort of trade you want to take on this. the minute. It's just one of those things that could absolutely scream either way. And in my experience, every time I've gone through one of these, which isn't often, it's every, maybe once a year I'll get a squeeze of this magnitude. Every time I get out and go, screw you, I've had enough. Look at oil last year. I got out there. Within a week, it had done 50% retracement. Yeah, it always happens. It's when I get out. Because I'm always the one that's getting squeezed in the same way as the rest of the institutions are. And at some point, they will just give up as well. So, yeah, anyway. So not sure what to make of that move today, but it's either an exhaustion move. And like I say, this push that we're seeing here will turn into an A-shaped recovery. An A-shaped recovery on a daily chart looks like that. That, at the end of a rally, is a reversal. That is the possibility today. So if at the end of the day you find yourself down here, I would also be tempted to take quite a large short on that with a stop loss. And it would be a gamble trade, but if it pays off, it will be a very significant payout. And I could do with getting that back, to be honest. Big loss. But anyway. Harry Kiri. I am pleased I took your advice and stopped trading the yen and the Swiss a couple of months ago. Well done, Adrian. I will take my own advice. Swissy, I'm not that bothered about. But, yeah, these guys could be trying to stimulate exports with a devalued yen. They're trying to boost their economy, but this isn't the way to do it, I don't think. They need inflation up. Yeah, businesses will go bust before it gets better and good enough, basically. Yeah. Imagine imagine you paid your mortgage if you're in the UK. Imagine if you paid your mortgage at the moment in dollars, right? So imagine if you took out a loan on your house here and you paid your mortgage in dollars. Yeah. This is just making your mortgage and your house more and more and more and more and more and more and more expensive. There will come to a point when your earnings do not cover the mortgage and you lose your house. Yeah. If you're a business in Japan now exporting to the US, you are screwed. And you will be more screwed if it does this. There will become a point where you go, I'm going to go and be a gardener because making my stuff and shipping it over there now isn't worth doing. So, it's just one of those things. You charge out in yen and you buy in raw ingredients in US dollar. You can't do it anymore. So that's where they are. It seems like the Bank of Japan and the central government aren't focused on that at all, which is fine. What their focus is, though, in that case, down to the speculators to figure out. And like that post says, if they were to sell all of their overseas assets, that will cause issues in the US, which will just mean that differential between the US and the yen remains in place longer, which devalues this further. It's just pointless what they're doing. So we'll see. But anyway, yeah, so that's the yen. Won't be seeing that on my charts anymore. We will look at it. People will want to look at it, but it's coming off the VPS, basically. I need to do that this morning, actually, because it's going to trigger some trades this morning. So if you are running any EA that is trading yen mean reversion, you might want to think twice because it's about to trigger shorts. Yeah, across the board, look, the hourlies are all getting above the 80 level extension. So I won't be taking those. It's so tempting as a mean reversion trader to jump on this because this is the exact situation we get the vast majority of those elastic band pingbacks. But as you can see, that's not the yen at the moment. So, but it will do. One of them will. It's always the same with trading. Yeah. Like with the market reverse alerts indicator, you get a reversal alert. It will either hold or it won't. and you get another one which invalidates. That will either hold or it won't. You get another one that invalidates. That will either hold or it won't. If one of those holds and you take them all, as long as that one is bigger than the 3 losses, you win. Every push this has had in the last few months has been the wrong one. When the right one comes, you're going to get that. At least. Look at the grand scheme. Yeah, you'd be down here. Potentially. That is coming at some point. When do you get in? So something like a stop loss trade. This is the sort of trade you want to get into. Shut your eyes, add to it every month, and don't touch it for 5 months. In 4 or 5 months' time, you'll be going, you'll be absolutely loaded. But I'm not that type of trader. I can't hold positions that long. I wish I could. I'm not an investment style trader. But if you are, there's a good opportunity here. Any chance they may do this intervention? Yeah, 50-50. I have no idea. No, I don't think they will. They've been talking about it here. We've gone through this every day, haven't we? They've been talking about it here. They were talking about it here. They were talking about it here. They were talking about it here. You watch this morning. I'm pretty sure they will talk about it. Not going to happen, is it? Yeah. Go and look at the last interventions. This is because this is all we've got to go on. You can only go on previous interventions. There's an intervention there. Yeah. They started talking about it here, did it. Yeah. It's quick. There's one tiny one in there as well. But go back to the main intervention moves from the Japanese. Yeah. They started talking about it at 145, 143, I think it was, something like that. 140. Oh, no, it's 145. Sorry, yeah, 145. They started talking about it at 145. Yeah, they said, don't do it. We will. They pushed it. Bang, intervention. Yeah, came back up. They said, don't do it. Don't do it. They did it. Yeah, but look how long it takes, 2 to 3 weeks, and they will intervene. Don't do it. Don't do it. 2 weeks, they said it. Bang, they did it. Don't do it. Bang, they did it. They've been saying it for 2 months, and they haven't done it. They can't. There's a reason they can't do this anymore. I don't know what it is because I'm not in the Bank of Japan, but there's a reason they can't do this anymore. Because they would have done it. They wouldn't have let it get to this state from here if they could do it, and I don't think they can. They've tried. We've seen little ones come in, haven't we? We've seen little like ADR hits coming in. Yeah, there's one. Look, fail. Yeah, got a little spike there. That was probably a new spike, but yeah, they can't do it. There's something changed in the fundamentals of the way the Japanese are managing this themselves now. But you know, like I said, I wouldn't say every time, but with probably 90-95% of the time, when I get out of a squeeze and I give up, it's literally within 24, 48 hours, what I was expecting to happen happens. So, but I'm not going to take that chance. But we'll see. Morning, Chuck. Morning, Franco. Morning, Rico. Morning, Gina. Wouldn't this boost Japanese exports as their goods become much cheaper for Americans? Not when you're invoicing in the US dollar, as most Japanese businesses do. This is part of the problem. Yeah. Don't forget, US dollar is the world's currency. Raw materials will potentially be bought in other currencies as well. So Aussies, all the raw ingredients, if you like, gold, platinum, etc., that's all come from the commodity countries, Australia, New Zealand, they will all benefit from this. Are all charged in dollars a lot of the time. It's just economic. It's, you know, it's just the way it works. It always has done. It's like why you know, certain, like gold is priced in dollars. It's not anybody's thing, is it? It's just, I don't know. We'll see. We will see. They're trying to stimulate growth, but whether this is the right way to do it or not, this seems like a bit of a gamble, but who knows? Later, the chance of negative impact on consumption is not zero if weak yen prolongs. Right? People might have a problem when gasoline costs $25 per gallon. Yeah, well, that's another thing, oil. You imagine swaps for 5 months, though, yeah. This is the thing. Everything encourages you to buy it. Everything encourages the institutions to buy this. But there's got to be a point where they stop buying it because it can't be done anymore. It's just, there's a limited number of buyers and sellers. You're going to run out of people that are going to want to take the other side of your trade at some point. And that is typically when this happens. When you get to exhaustion, yeah, you go up and you try and get more buyers, and there's just no one that wants to sell it. You go, give up, guys. Just get out and take the money. Yeah. That is what will happen. You'll pull back to that 24.72 range at some point off of that leg. It doesn't mean it's going to stop, does it? So we'll see. Anyway, out of my portfolio for the minute. Imagine, yeah. Speculative, they don't have the balance sheet to intervene anymore. Yeah. 175 ADR. Yeah, possibly. This is what I mean. You don't, I'm not an economist by any shape or form, and everybody that is sitting in a central bank or institution right now as an analyst is looking at it going, you can't know what's happened because it's not happened before. This is just unusual behavior. But somebody somewhere knows what's coming, and it's nobody in any other country apart from Japan. They're the same as the Swiss. This is why it's a difficult thing to trade the yen, and why people don't trade it, because they keep their cards very close to their chest, the same as the Swiss do. Yeah, look at the Swiss move on the interest rates. Yeah, they didn't tell us; they just did it, and they've done it so many times. They just do it. So same situation. Morning, Mustafa. Why is odds so strong at the moment? Don't know. Again, there's a lot of confusing stuff going on at the moment. We're in this bubble of interest rate anticipation. But commodity pairs will always do well in. You look at that fear and greed index. When you get to fear, commodities get bought. Yeah. So gold tends to rally. US dollar tends to rally. Commodities tend to rally. Australia and New Zealand are commodity pairs, same as a Canadian. So you tend to get CAD strength, Aussie strength, mainly Aussie strength because they're big mine exports. So that's a run on fear. You look at the fear and greed index. I don't think we've had one this morning. But yesterday, we're still in fear at the minute. And it's dropping as well. So this was 40 the day before. Yeah. When we get down to here, you buy the crap out of gold. But you probably will find it's already... actually, it probably won't be moving at the moment. I haven't got gold. But yeah, so we'll see. But it's... FX's impact on Japan's economy includes positive ones. Almost enticing people to just dump the yen, isn't he? Yeah. Japan has no experience of sustaining inflation for the past 20 to 30 years. It's like a child getting a new toy for the first time in 2 decades. Interest rates. Oh, what should we do with them? I don't know. Let's pop them up by 0.1 and see what happens. The rest of the world's going, no! Like, idiots. I don't know. Don't have to worry about it anymore. Not interested in it. Not playing with them anymore. 200 ADRs on the cards today. Not far off. Japanese locals are complaining about the increase in tourism due to the weak yen. Well, quite possibly, but I think they probably need the income at the moment, don't they? Yeah, I mean, where's cheap to go on holiday at the moment? From anywhere in the world. Yeah. Where are you going to go on holiday? Well, I don't know. Where can my pound buy me more yen or more any other currency? Yep, let's go there. Almost 200 yen to the pound at the moment. There you go. ADR exceeded, pound yen. Let's go on. Let's everybody go to Japan. I'd like to go and meet Ueda. Have a quick chat with him. Will you take yens from the new sentiment? Will you take yens from the new sentiment? EA testing. It's not running anymore, Peter. I've scrapped it. Doesn't work. I can't find an edge. I just can't find an edge. I've tried everything. I can't find an edge. Not that's sustainable. I can't find a stop loss based edge with it. I can't find a position trading edge with it. Can't find an edge with it, basically, at all. Sentiment. It's a weird thing because with sentiment, you know. Oh. That's not. What am I looking for? It's a weird thing because I know what happens, yet I can't seem to find an edge to extract money from it. Yeah, it's you know when the market is short, price goes up. You know when the market is long, price comes down. Yeah, they go long, market comes down. They go long, comes down. They go longer, comes down faster. Yeah, we know 100% factually that is the case on every instrument on the planet. Yeah, when they buy it, it goes down. When they sell it, it goes up. They keep selling it, it goes up. They buy it, it comes down. They go, oh, all right, we'll sell it. It goes up. Then they go, screw this, we're the wrong way. Let's buy it. It comes down. I know for 100% guaranteed fact that if you go the opposite way to what those retail sentiment figures tell you, the market will do the opposite thing and you will make money. Yeah, I cannot figure out a way to make money out of it. It's the most bizarre, frustrating thing in the world. I've tried enter beginning of the day, add if the sentiment is still correct. And yet every time I seem to do it, and whether IG are lying and these charts are just bull, I don't know. But whenever I do it, the market goes the same bloody way as the sentiment. And this is the second time, this is my third actual attempt at this. I went into sentiment trading about 6 or 7 years ago. There's a guy, a Russian guy, that created a indicator based on historical sentiment and an EA to trade against historical sentiment. All of a sudden, all these dashboards came out about sentiment. And I jumped on that bandwagon thinking, oh, that's how you do it. Because I went from currency strength, that didn't work. Then I moved into sentiment. Obviously, that didn't work. Then I moved the same thing as everybody else does. They system hop. They try everything and realize nothing works. So basically, I know you can see it. And then I went into trying a new strategy based on sentiment, which is where you only look at this part of the chart. Yeah. That's the only part of the chart you look at. Screw this. This has happened in the past. Doesn't mean anything. The way that you use this is if the blue line in the last 4 hours has gone like that, and the red line in the last 4 hours has gone like that, you know that there's massive sell orders just come in from retail, and you do the opposite. That didn't work either. Yeah. And the problem with sentiment is it changes too much. This chart that you're looking at, these are 4-hour candles. Yeah. So what happens is sentiment changes intra-week. Yeah. So it's got the same odds as anything else. Because it's constantly changing and going up and down. I've seen on the VPS running it for over the last couple of weeks that these numbers, you could have a 70-30 sentiment in the morning. In the afternoon, you're sitting at 50-50. And then the next morning, you're sitting at 65-35. Yeah. So within 24 hours, it's gone from being, let's say that's long, you should be shorting it, to you shouldn't be in it at all, to you should be shorting it again, but not quite as much as you were yesterday. And then the following day, a news event will come out and it will flip the complete opposite direction. You'll suddenly find a 25 up there and a 75 down there, meaning you've gone completely the wrong way 2 days ago. On this scale, you can see what the correct things to do is. The problem is this changes too much on an intraday basis. And you can't trade using this on a weekly basis, because if you go with what the sentiment is at the beginning of the week, by the end of the week, the sentiment could have flipped in the opposite direction, meaning you were wrong at the beginning of the week. Do you see what I mean? It changes too much and too fast to be able to use it as any kind of real signal. It could probably be used as a directional bias, but I've tried that. I've tried if sentiment is, say, for example, the market is 80% long, yeah, you need to go short, because we know if they are long, the market comes down, right? So what I've done is say, if they are all long, I'm going to look for short opportunities. So if we hit ADR to the upside, I will short it, right? If we go to 75% of ADR, a pullback, I will short it. Yeah, I've tried that with stop losses. But the trouble is it will do that for a couple of days, stop you out, and then the sentiment will work. And I've tried breakouts with it. If you find an accumulation breakout in the direction against sentiment, it stops you out. This is the problem with stop loss strategies, which is why I switched over to looking at position trading strategies. But with position trading strategies, it moves too much. Yeah. So I just couldn't find a way to do it. I'm not the only one. I know I'm not the only one, because when I went through my initial phase of analysis with this many years ago, I was in a group with a load of people, and we were trying all sorts of different strategies based around sentiment. And as far as I'm aware, no one ever found a way to do it. Look at it. It's like, if you caught them switching direction, they sold the crap out of the Euro Swiss for absolutely ages. It did nothing but go up. These guys have been short on this for months. It's been going up and up and up. Yeah. We know it works. How did you get in there? So if anybody wants to try a strategy, obviously on the website, this retail sentiment is published and updated every hour. So if you want to try a strategy, find one, be my guest. If you find one, let me know, and I will try and build some automation to maximize it. Look, 97% of the market is short on the CAD yen. It ain't stopping, is it? Aussie dollar yen, 90% are short. New Zealand yen, 90% are short. Swiss yen, 90% are short. Euro, 80. 85. Yen. Pound, 80. Yeah? There is nobody on this planet in retail at the moment that is not hitting that button. We know that. It's flying through the roof. But yet, how do you get on the thing? Because when you go back and look at the retail sentiment last week, that wasn't 80%. They were long in it. But they've all decided to go the wrong way. It's just, I just couldn't find a way to do it, Peter. So I ran it both directions as well. Yeah. So I had an EA working, which was taking sentiment it was taking trades with sentiment, and it was taking trades against sentiment, 2 separate accounts. My thought process was, one of them has got to make money. No, they both lost money. They both made money, but they both went into drawdown by large amounts, because the ones over there that made money got out. The ones over here that were the wrong way carried on getting in. So they just went into drawdown. So it ended up not working. So anyway, pound yen 225 of weekly. So yeah, that didn't work. Weekend supported global markets. Now it is turn off Fed and ECB to support market. Now it's the turn of the Fed and the ECB to support market. You say so? I don't know. Breaking news from the Bank of Japan, Governor Ueda. We've decided to scrap yen and use monopoly tabletop money game money instead, as they are worth more. Like it. Yes. Is that in Financial Juice? 8:37. He's still talking. Look, the guy is still going on. We're not necessarily thinking underlying inflation evidently rose between March and April. This is the thing that I don't get about their language as well. It's so woolly. Like that thing I posted it in Discord this morning. They said we're still examining how the March policy change is being digested in financial markets. Right? March policy update. Let's have a look at it. Right? I'm not an economist, yeah, but your March policy update, how do you think the market is absorbing it? Yeah, there's your March policy update. We're still examining how the policy change is being digested. I can show you how it's being digested, Mr. Ueda. It's buggered you. What more examination can you make? You know, it's like, just talk. Just do nothing. Just bizarre. Anyway. I like your, Gav, if you're in here. I like your, I'm going for a shower. There's a man going like that, crying in the shower, biting into soap. If something doesn't make sense, it means you don't have the correct information. Yeah, correct. Good stating the obvious there, Vaughan. Morning, Kennelly. The bottom of that retail sentiment page says retail traders mostly make money. What, this one? No, it doesn't. Every single Forex broker on the planet has a sign at the top saying they don't make money. I don't know where you read that, but have you had a look at Alien System? No. Right, Daniel, I got a video on my website. Sorry, it's not that one. This one. You might want to go and watch this if you're looking at Aliens System. Yeah, this video here. Do you honestly think I'm going to go and look at another trading system? No. If it's to do with sentiment specifically, definitely not. Because it doesn't work, does it? He's also looked at sentiment. Yeah, but he's not making money, is he? Because he's running a Forex Factory thread. And I would suspect it's probably a commercial one, isn't it? So, yeah, no. Anyway, right, analysis-wise today, there's not really a lot to look at. So, news today. Obviously, the Bank of Japan have gone, and again, this is the other thing, they've gone below CPI targets. 2% is your target. You've gone to a 1.6. So what do you do with that? Bloody drop it. Not put it up. Anyway, that's what the rest of the world does. You just don't do it. SMB Jordan, we got speaking at 9 o'clock. So 20 minutes, we've got Jordan speaking. Be prepared for some Swiss franc movement. This is always orange when Jordan speaks. Mainly because usually 99% of the time, nothing is said by the Swiss National Bank of any interest whatsoever. They do not tell us anything about anything to do with forward guidance or anything at all. However, every now and again, they will drop something and go, by the way, we're going to drop the interest rates by 1% next month. Panic. Yeah, so just be aware. Unlikely you'll get any movement off of it, but you know, this is talking heads move markets. 1:30, we got PCE price index, and then we got Michigan at 3. So there is potential for some US dollar volatility this afternoon. But apart from that, it's Friday afternoon. We're still in earnings fortnight. So there's still large stock earnings being released all week. Not that the markets have paid any attention again this week to what's going on. We had massive earnings out of Tesla and the NASDAQ dropped. So, yeah, yesterday we had Google and you had Gilead, Intel, Microsoft. Yeah, big names released after market yesterday. So today's open will include all pre-market announcements and all aftermarket announcements. And we've got one of the biggest corporations on the planet, two of the biggest corporations, three of the biggest corporations on the planet, Intel, Microsoft, and Google, announcing earnings yesterday. So Google did well, did it? Right, yeah. So in theory, market's up. In practice, they don't do anything at the moment. This is the thing that's frustrating at the moment, isn't it? Trading was used to be not easy, never been easy, but used to be understandable. At the moment, stuff is just not doing anything that's logical, is it? There's no logic left in this world at the minute. It's all changing too fast, and there's too much going on for the markets to actually have any real, this is what we're doing, and this is why we're doing it. Because it just is too crazy, the world we're living in at the minute. But that creates volatility, and that's what we need, volatility. So, no, the MyFX book one, yeah. Yeah, so the MyFX book sentiment page says that they make money, but though that's based on their accounts, isn't it? Yeah, so there's a lot. Don't forget, there's a lot of institutions that publish MyFX books as well that probably do make money. And you can make money, as we know, by being in the wrong direction. So it depends how you're trading, doesn't it? But yeah, I know. This is the thing. Retail sentiment is... And that's why I did that test to go with sentiment and against sentiment. Doesn't make any difference. That's the thing. Doesn't make any difference. So it's just not usable. It's like finding... Retail sentiment is like finding an indicator. You find a new indicator and you go, oh, that looks good on paper in back tests. And then you use it and it doesn't work. And you're like, why didn't that work? And I think sentiment is the same. It looks 100% logical on paper, but just doesn't tend to work for some reason. But there's a lot of indicators out like that. Anyway. Digested and already shat, I'd like to say. Not quite sure what I was saying at that time, Evil. That's good you're not bitter over the end now. No, I'm not bitter at all. No. It's just another trade. Yeah. I said it the other day, yeah. This loss is something that happens. It happens. Yeah, it happens to all traders. You get it wrong. This is wrong. But the reason for this trade was not the reason I got into this trade was not because of an RSI extension. It wasn't because of an ADR extension. It was literally I pressed the short button because the intervention talk was getting accelerated. Yeah. So there was no reason for this trade apart from Japanese intervention. That was the only reason I got into it. And I just held it too long because it looked like everything was going. It was a fundamental trade. There was no strategy at all. The strategy was, if they press the button, I make a fortune. If they don't press the button, we'll see what happens. What they did is they pressed the button in the opposite direction, didn't they? But yeah. But like I said, the amount of money I've made out of the previous two interventions, like I said yesterday, I've taken 3 intervention trades in my life. There's this one and the other two. The other two collapsed, made a load of money. This one, I didn't. So my strike rate is 66% on Japanese intervention trades. I'm happy with that. It's just that I lost a load of money here, but this is the thing, whenever you have a loss, you don't think about the 2 that you had before that paid for holidays, do you? Yeah, the last 2, I made a lot of money on those interventions. So, and the same as my oil trade I've got going on at the moment. I've got a long on oil at the moment with a $1,700 account, which has the potential to 10x if war breaks out in the Middle East. It's a fundamental play. If something escalates in the Middle East, oil price is going to go through the roof. If oil price goes through the roof, that's 1,700 turns into 17K. Actually, it turns into about 9K where my TPs are. But that is exactly the same as this type of trade. It's not based on a system or a strategy. It's based on a fundamental and something that I'm expecting to happen at some point. You've just got to survive long enough for it to happen. If they press the button this afternoon on this, I will cry. But I will know that I was right. It's just that I couldn't make any money out of this particular 1 in 3. So just one of them things. It's nice to be out of it. You feel like the weight is lifted off your shoulders and you just move on to the next. Despite the likes, yeah, hit the thumb bum. Rather, don't be a bum. Google started paying dividend and a share buyback. Google up 15%. Let's have a quick look at the NAS. Hello? Where's my terminal gone? My terminal's on a go slow. It can't launch this morning because it's powered by the yen. There we go. Yeah, so that's yesterday. There we go. Right, there you go. So that's the Google earning buy. So the market's already put the move in on Google. What did we have yesterday? 365 ADR. We did 515. So roughly 150 ADR. So that move is around about 75% of its average daily range, putting in one candle at the close last night. So the NASDAQ move on Google has already happened. I suspect we'll get a continuation on this today. So it's probably a good buy on the NASDAQ today. But look at Tesla. Yeah, it's just the market's just not doing the norm at the minute. It's not. S&P's down this morning. Dow's not really done anything yet. Well, it's not down, is it? The S&P. It's just where it opened, pretty much. But we're in a drop at the minute. But Nasdaq's holding a lot better, I think. So yeah, should be a good buy, I think, today. You're referring to the Bank of Japan still looking as how the markets were digesting the March monetary policy. Oh, right, yeah. Yeah, they shit it out, basically. They've digested it, they've eaten you, digested you, and you've come out the other end. I don't hate myself for losses, I just up the dosage, yeah. Right, so, other stuff to analyze today. Not a lot, really. ADRs today, as you can see, are all yen related. This is RSI. Would help if I looked at the same. I might as well leave those in place because I think if I just flick dashboards, ta-da! So ADRs today are all yen related. That's it. So up to you what you want to do with it. If you want to do anything with it, I'm not interested in doing anything with it. So obviously we know they've dumped the yen. So we will remain to see if we get a further continuation on it or whether they decide to do something. I suspect we will get exactly the same price action as we've had the last 2 times, which is a push and then sit sideways for 2 to 3 weeks. Push, sit sideways, push, sit sideways. Yeah, this is a push. I suspect you won't go anywhere for weeks now. It may do, may not, but this is the price action that we're getting. We're not getting market structure. There is no market structure in there. It's literally push, stop, push, stop, push, stop, because the market is waiting for them to press the nuke button and they haven't done it. So it is an ADR hit to the upside. If you short it, you could, the play basically is to take every double top you find, isn't it? But look at the movement. There's just no movement in it, is there? So but that's all your ADRs today. Obviously, there are lots of weekly ranges as well. RSIs, you're going to find the same thing. So the 4 hours, obviously, all yens are extended on the 4 hour. Again, all about the yen. Extended on the 4 hour. We're above the 80 level. Again, going back historically, looking at the 80 extensions on the yen. You did get that one. Yeah, this is normal price action, normal market structure. This is not normal market structure, obviously. So normal market structure, it's not really been a problem in the past as much, but you still get squeezed on it. So the above 80s, when you get them, tend to start a pullback. Can't see them. There's two there. There's one there and there's one there. That was an 80 just, but we've hit 80 just a few times. Getting extended above 80 since we've had since this year obviously has been pointless, because as this year we pushed up to that 140 that 150 level, which was the previous intervention point, the market's just been threatened every time we've got to those extensions. So all we've done is go sideways. So any RSI extensions on yen pairs at the moment, the likelihood is all you're going to do is go sideways. So there is a good opportunity for a short, but half an ADR. Don't go for anything more than quarter to a half an ADR profit. It's just not worth bothering with, is it? So don't do it. Well, I'm not going to do it. RSI extensions on the hourlies, all the same, every yen pair. So again, we know there's nothing else moving at the moment apart from the Japanese yen. So it's just a case of waiting for everything else to kind of kick in on news. So US dollar Swiss triple topped this week, yesterday. So I took my aggressive on that, which is held nicely. So stop on the aggressive above the high, quarter of an ADR roughly. So everything else is kind of just waiting at the moment for opportunities, but there's no RSI extensions much at all at the moment. So I'm going to be switching over to another breakout strategy, which I'm just building in EA to do all of the tests at the moment, which is, I've just downloaded an update, which I'm not sure is actually working. But so basically, it's an ADR breakout EA, which basically just takes breakouts and adds into breakouts into trends, because I think we're going to go into a trending market over the next year, shortly, probably in the next couple of months. So I'm going to set an account up to run breakout strategies and trend strategies, still using position trading, but it's going to be kind of a longer term strategy. So you can see that just added into that trade, which broke out. Breakout's working, get out. So it's basically very simple: accumulation, ADR break, pullback, leg up. So there's a trade on the ADR hit, it pushes up. There's a trade on the pullback. There's a trade on this break, and you just add into the trend and get out. So that strategy is I'm just built the EA to back test it, because obviously you need to be able to back test. I can't be bothered to back test manually because it takes weeks, months. I just build EAs which will automatically back test the strategy, and I can just get the results in days, basically. So I'm just working on this at the moment, and I'm going to get the account set up hopefully in the next week or so. But it's a manual strategy. You can trade with, I'll be trading with a position trader EA probably. So I'll just be using the buttons to get in on the breakouts. So opposite to ADR reversals. Yeah. So what we're looking for is this one wouldn't have worked. Well, actually, this one hasn't actually played out yet. So accumulation, ADR breakout, take the ADR breakout. If it pulls back into the range, add, average in. If that trend is going to go, so market structure, basically, it's exactly the same as I always do, market structure. Yeah, so we got an accumulation, you break out, you pull back into the accumulation, market structure, high, low, lower, high, lower, low. Same thing, except we're taking the breakouts rather than the mean reversions. So ordinarily, we would play that back up into there as the trade. What we're doing is we're waiting for that to have happened, and we're adding to the next leg with the banks, which is usually in a propulsion gap. Yeah. So kind of a breakout strategy. So it's to basically diversify moving forward. So I'll still be running mean reversion, but I will also be running breakout, which means that sometimes I might be trading both directions on different accounts, which is fine because all we're doing is scaling into the one that doesn't work. So yeah, so I'm working on that at the moment, and just getting that. There goes another one there. So that was a breakout, ADR breakout, add, exit, done. So it's a good strategy. Adding to winners. It's what we do when we scalp. So yeah, I will update you on that when I've done the back testing. But something else to add to the portfolio, basically, to try and circumvent the RSI at the moment, because the problem with the RSI at the moment is there is a lack of signals and the market is like this a lot. What happens when the market is like this? We get breakouts. So there's an awful lot of accumulation going on at the moment and very little else. Like I keep saying, we get this is market structure at the moment. Yeah, that is untradeable with mean reversion in position trading. So I need something to go alongside this that can benefit from these moves that we're getting. So if you look at the US dollar yen and how that strategy would have played out in the US dollar yen, yeah, it got an accumulation break. We would have taken that, added, out. Accumulation break, taken that, added, out. Accumulation break. Yeah. So when you get a trend, a normal trend, New Zealand dollar yen, RSI extension, a normal trend goes like that. Low, high, higher, low, higher, high, higher, low, higher, high. Yeah, we know how it works. So before that, you get the accumulation. It either breaks out and retests, or it breaks out and comes back into the range. So it's a 1, 2, 3, out. Yeah, very simple. If the breakout fails and it turns into this, on the other account, we've taken a mean reversion short. Doesn't matter. Yeah. So as long as the risk reward is managed on both strategies, they will both profit, or one will profit exponentially while the other one is making losses, and this one will make more than that one. So it's kind of like a hedging strategy. You could run it on one account, I guess, but it's oh, where do we go? That's not Ueda. Here it comes. Told you. This is the intervention. Can't believe it. This is the intervention. So the target is 800% of ADR. So if you are short still, hold it. Do not get out. Hold it. I can't believe it. $11K. What did I say at the beginning of the stream? What did I type in Telegram this morning? As soon as I get out, exactly within 24 hours. This is within 1 hour. Look at my look at my exit, right? We've had 1 hour. Now the intervention's here. So just as a measure, if anybody is still short, last one was 800%, which is going to be somewhere in the region of, that's 10. So you're looking somewhere, you're looking at this low here as the potential target. There's your target. May not get there today, but that'll be a target roughly. It's I've got another account which has got some yen shorts on. I've just remembered. I put targets on them. I bet they've been hit. I don't want them hit. Oh god, this is a cock up of all cock ups. This is, isn't it? Wrong account. Miss that. Okay, that's only 225 ADR so far. So, right. So this is pulling back. Your choice, right? If we're expecting an 800% ADR drop, and this is pulling back to here, you can take a short now, obviously. Do not risk any more than that. Measure what that risk would be. And your risk reward on it is going to be somewhere in the region of 4 to 6 on a stop loss based trade. I have got shorts running over there. Just going to remove all my I just got to remove all my take profits. Hang on. Cancel. Okay. So if this is the intervention, this is just the start. Your options are 2.5% risk over 1 ADR. So where we are here, that is roughly an ADR. So if you're using the position trader EA, whatever you put in there is basically what you're going to lose on the account if this is not an intervention. If this is an intervention, you can times that by 4. So I got multiple dashboards open at the moment. So bear with me a sec. Okay. Short one. Okay, I'm putting an ad at the lows. This could work or not. We'll see. They heard I was out. Yeah. Told you, they got cameras on it. Still don't think this is it. We'll see. We'll see. Can I ask you about if it's possible to make alerts every time the rectangle? Yeah. Every time the rectangle appear? Oh, what you mean this? The support rectangle? No. You just get alerts constantly all day. If I put that into the dashboard, you would literally get an alert every candlestick, pretty much. Yeah, think about it. Every time with the support rectangle on the market reverse alerts indicator, every time there is a candlestick in the opposite direction, it will paint a rectangle. Yeah, if you're trading the 5-minute chart, literally you'll get 20 alerts of every candle. It's just not practical. They don't help you in any way, shape, or form either. Even if this isn't an intervention, there is a good chance that this will be enough for the market to stop this, basically. So look at this. If it isn't going to turn into a continuation, as a shot across the bow, basically, you guys just bought the crap out of it. You are all now warned. Yeah. Anybody that's done that with any kind of stop or reverse order, don't forget markets and institutions use stop and reverse. They've just been reversed. Now they're pulling back. So what they've just seen is their entire profit disappear, get into a short position and put underwater. Yeah. Sorry, guys. Didn't mean it. Let us out and we'll stop doing it. Yeah. So there's a potential that this is a shot across the bow and that is it. We won't achieve anything beyond that level. If it is the intervention, it comes in stages. Yeah. And if you need to go back and look at previous, but if you look at the 4-hour candlesticks, you'll find that there's a big pullback on a 4-hour and then there's a continuation. It's a little bit like a news event. When you see the news events, you get the big initial move and pullback, and then the market pushes up and then breaks that high and off we go. Yeah. And then we get that large move. So if it is that, that's what we're seeing. If it isn't, and it's just a fake out, it's a fake out. Well done. They got me for 2.5%. Good for them. I'm making sure I'm taking 2.5% as well. So we'll see. But yeah, every bloody time. So I had an opportunity at worst to not take that loss there. But anyway, we'll see. Could be a fake. I'm done with US dollar yen. Just got my money back. Yeah. That will help me get back a lot of my money if that does turn into an intervention move. Looks like it's getting fought over at the moment. Someone just made a big load of cash, didn't they? Up 3%. Well done. On the first intervention, wasn't there a little warning shot? Yeah. Yeah, that's what I mean. That's potentially the warning shot. And then obviously the real move comes after. So we'll see. But I'll hold that 2.5%. To me, that is just an opportunity for them to push it as well. So, but for 2.5%, it's worth the risk, isn't it? Yeah, 2.5% gets me back all of those gains. That trade, if that intervention plays out, if it plays out, obviously, that is 11k. Yeah, that's what I've just taken in loss. So I'm going to add into it as well. So if it does, I will add multiples into that if it works. But if it doesn't work, it doesn't work. Yeah. But like Google's just said, yeah, could fly from there. We don't know. No one knows. No one on the planet knows. Google doesn't know. I don't know. The banks don't know. If the banks knew, they'd be doing it, wouldn't they? Yeah, Bank of Japan is trying its hardest not to go bankrupt. That was its attempt. If that is its attempt, it's dead, isn't it, in the water? So we'll see. That boosted my morning. Good one. Yeah, so it's one of those trades which is is a gamble. It's either going to work, or all trades are the same, aren't they? It's either going to work or it's not. But something snapped there, whether it was a fake out basically and a profit take. Someone's just taken a massive profit very quickly, or whether it was an injection. Yeah. Trouble is, you can't know. The only people that know if that was a move by the Bank of Japan are the Bank of Japan, and they're not going to tell us, are they? Yen swings from losses to gains in sharp move. Thanks for that. I just saw that. But it's funny, isn't it? After the Bank of Japan shut up, after Ada stopped speaking, then they do it. Yeah, it'll come out of nowhere like that, like we just seen. Yeah, it'll just come out of nowhere if it's going to happen. So we'll see. Anyway, so that's either going to cost me 2.5 or it's not. And if it doesn't, fantastic. If it does, nah, whatever. I've got to go out this morning anyway, so I won't be here. I'll either be coming back to happiness or sadness. But we'll see. Right, I'll be back on Monday. So this afternoon, you just need to worry about the PCE, which is forecast no movement, so might not get a lot out of it. With what's going on this morning, potentially as well, that US dollar is probably not going to have a lot of liquidity to be put in. It was a big volume spike where we saw it, didn't we? University of Michigan as well this afternoon. The UOM does move the market quite substantially sometimes, so be aware of that at 3 o'clock this afternoon. It's end of week. It's kind of the last Friday of the month. Well, it is the last Friday of the month. So it is kind of getting towards end of month profit taking as well. So we quite often see large moves start at the end of the month where the markets are just balancing books and getting into profit. So we'll see if we get some movement this afternoon off the back of these two. But next week, it's a bank holiday in Japan. They're not doing anything on Monday, are they? We've got CPI for the Eurozone, going to be critical. That German CPI comes out in 5 states. So it's not one single announcement. We've got GDP, we've got unemployment rate for the New Zealand dollar. It's the Fed rate, which isn't going to change, but the press conference is going to be very critical next week. That's going to be a big one on Wednesday, obviously. So we might not get a lot of movement next week either on that, because we're going to see Monday and Tuesday waiting for Wednesday. We got the Swiss CPI figures. Again, market will react heavily to that. And then next Friday, we've got unemployment. So there's lots of news. Oh, no, yeah, Friday the 3rd of May. So end of month is Tuesday. So potentially you've got profit-taking moves on Monday, Tuesday to look at. So we'll see what happens with those. But yeah, all about the yen today, as we know. And yeah, I'm kind of glad it didn't happen, to be honest, because that would have really annoyed me, having got out literally on the candlestick that causes that intervention. Would have been not so much rubbing salt in the wound, but treading on you and setting you on fire while they rub the salt into the wound, wouldn't it? Bank of Japan, I love you. And on that note, I will leave you and be back on Monday. So anything you need, I'll be in Telegram or Discord. And Monday, haven't put the schedule up yet. Monday, I'll do a Monday morning next week because there's no news apart from CPI, and CPI is going to come out all morning. So we might as well just do a Monday morning, and then we'll have a look at what's gone on with the yen. But I will be in Telegram updating anyway. So we will see. Have a good weekend. If you're short, good luck. If you're long, good luck. If you're not in it, well done. You're not going to have any stress this weekend. All right. Have a good one. Anybody needs anything, let me know. Otherwise, I will see you on Monday. Have a good one.